Are you prepared for the next big investment opportunity?
In this video, we'll explore pivotal insights with top analysts like Komal Sri-Kumar and David Lin.
Discover key factors that could change the game for investors in today's economy.
And best of all, this analysis is condensed into minutes, thanks to our intelligent summaries.
Imagine understanding the market before your competition does. Just a quick disclaimer, this content is for educational purposes and does not constitute investment advice. Stay tuned. After these insights, we'll dive into more advanced topics, including a segment on quantifying quantum computing and AI drug development, featuring Brett on ARK Invest. You might think quantum was the hot topic of the week, but Brett is here to shed light on why the real excitement is around the Relation Therapeutics deal with GlaxoSmithKline.
Alongside that, Google announced a groundbreaking quantum chip, doubling its qubits, a crucial step forward.
But is this the quantum leap we've all been waiting for, or just another mirage?
Quantum computers can process complex calculations exponentially faster than classical computers, which is essential for drug discovery.
But Brett, can you explain quantum computing simply? What's a qubit anyway?
Think of it this way. Instead of just being a 0 or a 1, qubits can represent both simultaneously, like holding two possibilities at once.
To clarify, a qubit can exist in both a state of 0 and 1 at the same time, like a dimmer switch.
So it's not just about speed, right? It's also about solving problems we can't even touch right now.
AI is already outperforming traditional methods in drug discovery, potentially slashing development costs from $2.4 billion to just $600 million.
Is this the market shift we've been waiting for? What do you think drives this revolution?
If we can discover and test drugs faster, isn't that a boon for everyone, patients and investors alike?
We're looking at a significant evolution in how drugs are discovered, potentially unearthing lucrative treatments that were previously considered impractical.
So you mean to say that previously unprofitable drugs could now be worth pursuing?
That sounds incredibly promising. Are we on the verge of a breakthrough in healthcare access?
In summary, while quantum holds potential, AI is the present forward momentum driving innovation and cost efficiency in drug discovery.
Let's face it, the next decade could very well be defined by how well we exploit AI in pharmaceuticals.
The excitement over potential cure developments is palpable. But will we see real change?
Today marks a shocking downturn with the S&P 500 down 3%, and Dr. Komal Sri-Kumar is here to explain why.
It's about signaling from the Fed, where Powell's cautious stance might suggest less support for the markets than before.
So this isn't just a routine drop. This is significant.
Today's drop reflects a key shift. Powell's narrative isn't just about keeping prices stable anymore.
But isn't lowering rates normally meant to stimulate the economy? Why such a strong reaction?
It's a double-edged sword. They lower rates to help, but fear instability might actually hurt.
The surprise isn't just the cut, but the realization that Powell may not offer the Fed's usual support.
So, there's a feeling of abandonment from typical Fed interventions.
And how is that different from past behaviors?
Cutting rates might spur inflation rather than help growth. It's a paradox.
What are the implications for everyday Americans?
Think about it. Higher inflation might mean your grocery bills keep rising.
Tariffs increase costs, and those costs get passed down to us.
So higher prices at the store could coincide with less purchasing power?
Exactly. It's like tightening one area just to loosen another.
Dr. Sri-Kumar predicts a potential surge in inflation if the Fed's pattern of cuts continues.
He anticipates that these patterns could very well trigger another economic downturn.
So should investors brace for volatility?
Expectations are for a continuous decline if yields keep rising.
Is this the start of a longer downturn?
It sounds like investors should be strategic about their next moves.
The upcoming year poses significant challenges for investors as they adapt to these evolving patterns.
In essence, it's about charting a path through turbulent waters.
Right, staying informed will be key to survival.
Jeff Snyder is here to explain how and why governments are collapsing across the globe, from Canada to France.
It's essential to understand that this isn't just political chaos. It's about underlying economic truths that the governments are ignoring.
You mean to tell me that the instability is directly tied to economic performance? That sounds serious.
Absolutely. Let's break down the reasons behind these startling claims.
In Canada, for instance, Trudeau's government is suffering because people feel the economic reality doesn't match what he's saying.
But why do governments insist everything is fine when it clearly isn't?
They cling to optimism as a political strategy, hoping for a recovery to validate their spending. But it hasn't worked.
Jeff points out that the Bank of Canada just cut rates twice in a row. That's a loud alarm bell.
But what does that really mean for the average Canadian?
It means the economy is struggling more than they're being told. Rate cuts reflect desperation rather than recovery. Jeff argues that Canada's burgeoning deficits are signs of mismanagement.
Exactly, they're spending wildly, expecting the economy to rebound magically.
So, where's the accountability?
Voters are demanding it, which is why governments like Trudeau's are in free fall.
In Jeff's view, rising joblessness is the tipping point for political upheaval.
And how does this connect to the other crises?
Low wages and limited opportunities lead voters to seek alternatives, hence the political chaos. Jeff illustrates that the tumult we see isn't merely political, but deeply rooted in economic disillusionment.
So the political chaos is a direct reflection of economic despair?
Yes, the public is no longer willing to tolerate the lies they are fed about prosperity.
Jeff predicts that we will see more government collapses if economic conditions don't improve.
Which markets may react dramatically to these changes?
Markets will be on edge, expecting more turmoil if these signals go ignored.
Jeff warns that we may see an increase in popularity for alternative political movements.
So the current players will start losing their grip on power.
Correct, they must adapt or be replaced.
Ultimately, Jeff emphasizes that without addressing the real economic issues, political turmoil is simply inevitable.
It's all about transparency and realism.
So what's the action now for voters?
Demand accountability and educate themselves on economic indicators to push for real change. Jerome Powell's latest decisions have sent the markets spiraling. What's going on?
Absolutely. Powell's unexpected revisions of interest rate projections have left investors scrambling.
It's like we're on a roller coaster with no safety bar.
So we start with Powell's shocking revision from a 3.4% to a 3.9% projected Fed funds rate for 2025.
Right, and this implies the market now has to brace for fewer rate cuts than they were hoping for. How is that supposed to calm frayed nerves?
Exactly. It's like promising a party and then telling everyone it's just a Zoom call instead.
So why did the market react so aggressively despite not even being down 3%?
Well, because investors were caught off guard. The Fed signaled a far less optimistic outlook on rate cuts.
So it was like expecting a picnic and getting promised soggy sandwiches instead?
Exactly, what a letdown.
The VIX is telling us not only that fear is high, but also that major shifts are at play.
So, would you say the market is entering a risky territory?
Absolutely. It's like a tightrope walk without a safety net. Powell indicated he doesn't welcome cooling in the labor market, but isn't the hiring rate already down?
Exactly, it creates a contradiction that leaves investors guessing about actual conditions.
So, we're essentially navigating a boat with no compass.
Spot on, tough waters ahead.
What technical indicators are we observing after Powell's announcements?
The S&P is clearly under pressure, suggesting lower highs are likely.
Hold on. So is it like trying to predict the rain when you don't even have a barometer?
Pretty much. This unpredictability makes it tough for traders. It seems the sentiment is very shaky among investors right now.
Is there a way to navigate this uncertainty?
Definitely. It's about risk management and staying vigilant.
I'd say it's like walking a tightrope while juggling.
Predictions suggest that volatility isn't going anywhere. We could be in for a rough ride.
So it's like holiday shopping on a budget. Unexpected expenses everywhere.
Right, markets may behave unpredictably until 2024. Will we see a return to traditional market behavior?
It's likely. Adapting investment strategies will be crucial moving forward.
Like recalibrating your GPS before a long road trip.
Exactly. Prepare and adjust for the best chances of success.
Key takeaway: adaptability is crucial in this ever-changing landscape.
And investing will be less about guessing and more about understanding impacts.
So we're getting a crash course in adaptive investing.
Yes, and it's a wild ride. Let's dive into the recent Fed update. Axel Merk, our trusted financial expert, is here to break it down.
Absolutely, Adam. The market is reeling today from Powell's comments. It wasn't exactly a dull day for investors.
What do you mean? I thought it was just a small rate change.
It's always more complex than that. Let's unpack it.
Markets didn't react well today because Powell signaled a new cautious phase, thinking we can't just keep cutting rates.
So he's backtracking. That's a pretty big signal for investors, right?
Shouldn't they have been used to this by now?
Not when it could lead to inflation remaining stubbornly high. That's a game changer.
Axel, it seems like the market's reaction was akin to stepping on a landmine today.
Exactly. Powell's language now suggests they're feeling out whether cuts should continue.
But is that reaction warranted, or are the markets being overly dramatic?
Great point. It feels like a tipping point.
I foresee increased volatility as this uncertainty settles in. Investors will be on edge.
So expect the unexpected is your mantra now, Axel?
Precisely. Markets really reflect the uncertainty. Investors should keep calm and stick to their strategies. Panic seldom leads to better decisions.
It's a survival game, and carefully mapped out plans will often prevail.
So it sounds like staying level-headed is crucial. Got it.
The Dow is down 1,000 points after the recent Fed rate decision. Shocking.
It's more than shocking. It's alarming. The markets weren't prepared for this hawkish cut.
What are the implications of the Fed's sudden hawkishness? This is a clear warning for investors.
This isn't simply about a rate cut. It's a reflection of deeper economic struggles, reminiscent of the 2008 GFC.
Absolutely. Looking back at 2007, it's eerily similar with all the warning signs flashing again.
So, are we watching a replay of history here?
Did the Fed really expect the markets to remain calm after such hawkish remarks?
No way. This sudden tone shift left investors scrambling.
It's like trying to steer a ship through a storm without any warning.
Jeff Snyder suggests that these collapses are symptomatic of larger systemic issues in global economies.
That's fascinating. It shows how today's economy is deeply interwoven.
So the situation in the US could reflect issues elsewhere.
The state of auto manufacturers is alarming. 64% profit drops. What does that mean for the economy?
It suggests consumers are tightening their belts.
It's a sign of a struggling economy. When the auto sector sneezes, the rest of the economy catches a cold.
If the trends continue, we could see an unemployment rate nearing 5%. That's serious.
Right? And if inflation doesn't stabilize, we're in for a deeper crisis.
So what can viewers do to brace for such storms?
It's not just about survival, it's about strategizing for the future amidst chaos.
Exactly. Knowledge is power in these unpredictable times.
So, what actions should the average person consider today?
What an insightful discussion we just had, right?
Absolutely. Each expert brought such valuable perspectives to the table.
Let's break it down a bit. Jeff Snyder pointed out the potential crisis from the Fed's actions.
And Axel Merk emphasized how this cautious monetary policy might lead us to even tighter spots.
That was a fascinating point, but it's interesting how they disagreed on how quickly this will affect us.
Exactly. Jerome Powell and Dr. Komal Sri-Kumar both warned of the immediate repercussions but offered different timelines.
And Jeff Snyder brought such an eye-opening angle, linking economic conditions directly with political unrest.
Right? Those connections are crucial, especially with the turbulence we see in today's governments.
And let's not forget Brett's take on quantum computing, a thrilling development.
Absolutely. But the interplay between hype and practical use is something to watch closely.
So, if you found this discussion valuable, remember to like and subscribe.
Your engagement helps us continue providing stellar insights into the financial world.
Thanks for tuning in. Be sure to check out our other videos to deepen your understanding.
And remember, knowledge is power. Stay informed.